So the following question we need to ask here, and I'm going to ask questions and answer them very quickly here. The first question, how organizations are disclosing that, where they disclose that. So there are 4 options. One of them is sustainability report, which is a separate report, which is here, which is you can see it is the orange area. Others are doing it as part of the annual report, which is the traditional annual report, which is the blue area here. Others are doing it through green report, or what we call integrated report, which is the green area, and others we do not having any disclosure, which is the we call it the gray area here, which is 9%. If you look at the area that we can see 57% of organizations, and this is a report coming from the International Federation of Accountants in 2020, they said that 91% of organizations are disclosing ESG, 57% through a sustainability report, which is a standalone report, 18% through the annual reports, and 16% through the integrated report. So you can see overall we have a good chunk of organizations across the world disclosing ESG, but in different ways. All right. So that's another thing, how they disclose. So in answer to the question, how they disclose in 3 areas, either to be a part of the annual report, or a standalone sustainability report, or a standalone integrated report. And these organizations who are doing integrated reports, sometimes they don't take it as a report, but take it as approach. So they're saying, okay, my organization is using the integrated reporting approach. So they have the annual report and having a supplementary document called the integrated report, which shows the sustainability data. Here is just a comparison about countries around the world, how they do these things. So we can see here that the highest country that's having like the orange area, which having like France, for example, is very unique. So you can see France is the only block blue, as you can see it from here. It's a block blue. What does it mean, block blue? It means that it's having all its disclosure as part of the annual report. So this one form of disclosure. So France is a very unique in this case, that is only disclosing ESG through their annual report. They don't have integrated report or have any sustainability report. It's everything in one place, which is the annual report. Other countries have different areas. For example, USA, majority of having something called a sustainability report. Very little having blue, which is part of the annual report, and then very little about sustainability report. So the integrated report. So US is more accommodating a sustainability report as a complement to the annual report. Other countries are having different areas, but mainly if you look at other countries like Canada as well, it's very high on sustainability reports. So you see North America and Canada is more focusing on sustainability report as a standalone report. In the UK, for example, is half and half. Some of them, as I mentioned, about 55% using the sustainability report, and the other 50% or 45% is either using the annual report or the green area, which is integrated report. So you can see here what I'm trying to tell you from this diagram. There is no rule of thumb here, all right? There is no rule of thumb or difference. They are having different variations with the exception of France. All right, so that's how it works here in terms of reporting and integrated reporting. There's a very quick question about difference between ESG in the annual report and issuing the integrated report. Is all about the assurance level, Alexander. So sometimes if you have the assurance level as part of the annual report, is setting the expectation that everything is audited, which is not true. While companies who are trying to do the sustainability report is that they're doing separately and they provide what we call audit or environmental audits. All right, so that's different. So that's the major difference between having a sustainability report or integrated report separate from the annual report, because they don't want to mislead the public saying, okay, as part of the annual report, everyone will expect that it's been audited, which is not always the case, which I'll come back to this one through a paper or research we've done recently, which might answer this question more clearly, how that can mislead the public. So it's more about perception, how you meet the expectation of the public without misleading them. So some organizations saying, no, we'll do it in a separate sustainability report or integrated report to ensure that we manage the expectations of our shareholders or stakeholders in general, while others, no, we'll put everything in one place and that should be fine with them. So that's exactly the case. So the main motivation behind putting it as part of the annual report or separated sustainability report or integrated report is how people or the public of these kind of investors or stakeholders in these countries will perceive these type of reports. Okay, I hope that answered your question, Alexander, but I'll go back to the question because it's a very important one. The second question is, who will do this job? Okay, who will audit these companies? So we have here audit firms. Again, 58% of this service across the world is offered by audit firms. 5% offered by affiliated firms. Affiliated firms means it's a standard part of the firm, but it's a separate entity. That's what we call affiliated firms. And 37% through what we call other firms or other providers. And one of the popular other providers, what we call sustainability agencies or sustainability rating agencies, or sometimes they call it environment rating agencies. They call them themselves different names, but you can see it's a growing market here. That 37% of the audit or the ESG assurance is done by other companies, not audit firms. So again, it's a wide market. It's not just manipulated or monopolized by the audit firms as the statutory audit. So there's a lot of things growing here in this market. So looking at the standards, okay, well, standards, I'm looking at the international standards of accounting and auditing. One of the key standards is what we call the ISA 3000. ISA 3000 is international standard for audit engagement. And the 3000, I put it, is revised. It's been revised to include in it some guidelines for those companies who would like to engage on this kind of assurance, which is the ESG assurance. So the ISA or the International Standard of Auditing 3000 in general, it dictates how organizations or clients can engage with audit firms. But here they revised or revisited these standards recently in order to include in it this type of assurance, saying ESG assurance. Some of them about, okay, you need to ensure that there is some kind of segregation between the partner who's doing the statutory audit and the partner who's leading on the ESG audit or ESG assurance for the same client. So some of these guidelines to ensure some kind of independency of the two partners. And it goes to more details like the ISA 1000 and 1460, 1464. And these are standards to dictate how these kind of things work. So I'm not going to go into the details of the standard, but the important thing I need to mention here as well, the orange area, that affiliated firms are more talking over here when talk about standards, while other service providers are not really following standards. And you can understand that because some of these affiliated firms are not having accredited accountants. You're just doing it from an expertise point of view and like some kind of a consultancy service rather than a regulatory compliant requirement like audit firms.